Hello, everyone, and welcome back to the Babalian Money Show. Today, we read diving headfirst into a question that's on every investor's mind. Is the current AI boom the next dot-com bubble? It's a fascinating comparison, and the parallels are hard to ignore. We see soaring stock prices, massive investments pouring into any company with AI in its name, and a level of public excitement that feels eerily familiar. But before we get into the thick of it, a quick disclaimer. I am not a financial advisor, and this video is for educational and entertainment purposes only. Investing involves risk, so please always do your own research and consult with a professional before making any financial decisions. Now, let's rewind to the late 1990s. The internet was the new frontier. Companies like Pets, Com, and Webvin were valued in the billions, fueled by the belief that the internet would change everything overnight. The hype was intoxicating. Investors threw money at dot-com startups, often without looking at their fundamentals. Many of these companies had no clear path to profitability, no solid business model, just a cool website and a lot of venture capital. The mantra was get big fast and worry about profits later. The NASDAQ Composite Index skyrocketed, more than doubling in a single year. It felt like a party that would never end. Then, in March of 2000, the music stopped. Reality set in. Investors realized that many of these companies were burning through cash with no sustainable revenue. The bubble burst, and it was brutal. The NASDAQ lost nearly 80% of its value over the next 2 years. Trillions of dollars in market value evaporated. Fortunes were wiped out, and companies that were once the darlings of Wall Street disappeared almost overnight. It was a painful lesson in the dangers of speculative mania and the importance of solid fundamentals. The dot-com crash left a scar on a generation of investors, a cautionary tale about what happens when hype completely decouples from reality. So, fast forward to today. The excitement around artificial intelligence feels incredibly similar. AI is being hailed as a technology that will revolutionize every industry, from healthcare and finance to transportation and entertainment. And there's a lot of truth to that. The potential is immense. Companies like NVIDIA, which makes the chips that power AI models, have seen their valuations soar to astronomical heights. Startups are raising billions of dollars based on the promise of their AI technology. Just like the dot-com era, there's a gold rush mentality. Everyone wants a piece of the AI pie, and the fear of missing out or FOMO is palpable. We're seeing a similar pattern of investment. Money is flowing into the AI sector at an unprecedented rate. Venture capital firms are battling to fund the next OpenAI or Anthropic. Big tech companies are in an all-out arms race, spending billions to develop their own large language models and AI capabilities. The stock market is rewarding any company that even mentions AI in its earnings call. Sound familiar? It's the same kind of speculative fever we saw with Com in the late 90s. The narrative is powerful. AI will change the world, and you need to get in on the ground floor. But here is where we need to look closer and ask the critical question. What is different this time? While the hype feels the same, the underlying fundamentals of the AI boom are arguably much stronger than the dot-com era. First, let's talk about the key players. The charge is being led by some of the biggest and most profitable companies in the world. Microsoft, Google, Amazon, Meta, and Apple. These aren't flimsy startups with no revenue. These are tech behemoths with massive cash reserves, established business models, and a global reach. They are integrating AI into existing highly profitable products, from search engines and cloud services to advertising and consumer electronics. This is a crucial difference. During the dot-com bubble, many companies were built on pure speculation. They had no customers, no revenue, and no profits. Today, the leaders of the AI revolution are already generating hundreds of billions of dollars in revenue. They are not just selling a dream. They are selling real products and services that are being adopted at a rapid pace. AI isn't just a concept. It's a tool that's already creating tangible value and efficiency gains for businesses and consumers alike. Another key distinction, is the infrastructure. The dot-com boom happened before broadband internet was widespread. Many of the visionary ideas of that era were simply too early. The technology and infrastructure couldn't support the vision. Think about video streaming or online grocery delivery. The ideas were there, but the dial-up connections and logistical networks weren't. Today, the situation is completely different. We have global high-speed internet, ubiquitous smartphones, and a massive cloud computing infrastructure that can support the intensive demands of AI. The world is ready for this technological leap in a way it simply was and for the dot-com revolution. The pipes are already built, so to speak. So, does this mean there's no bubble at all? Not necessarily. While the foundation may be stronger, there are still pockets of extreme speculation that are cause for concern. The hype is real, and it can lead to irrational valuations. We are seeing smaller, unproven AI companies getting funded at sky-high valuations, reminiscent of the dot-com days. It's very possible that many of these will fail, just like their predecessors. The market might be correctly identifying the long-term trend, but it could be getting the short-term valuations wrong for many individual companies. A correction is not out of the question. We could see a shakeout where the weaker players are weeded out and the market takes a breather. This is a natural part of any major technological cycle. But a full-blown collapse on the scale of the dot-com crash seems less likely, precisely because of the strong fundamentals of the leading companies and the real-world applications of the technology. The internet did, in fact, change the world, but it took longer than people thought, and the initial winners weren't always the ultimate ones. Amazon survived and thrived, while Pets.com became a punchline. The same will likely be true for AI. There will be winners and losers. So, how should you, as an investor, navigate this? The key is to be discerning and focus on quality. Don't just chase the hype. Instead of throwing money at any company with AI in its name, look for businesses with strong leadership, a clear path to profitability, and a durable competitive advantage. Are they using AI to enhance an already strong business? Or is their entire existence based on a speculative AI promise? Diversification is also more important than ever. Don't put all your eggs in one AI basket. Spreading your investments across different sectors and asset classes can help mitigate the risk of any single area experiencing a downturn. Ultimately, while the AI boom shares the speculative frenzy of the dot-com bubble, the underlying substance is far more significant. This is not just about eyeballs on a web page. It's about a fundamental technological shift that is already creating real economic value. There will likely be volatility, corrections, and many companies that don't make it. But the AI revolution itself is real, and it's here to stay. The challenge for investors is to separate the enduring value from the fleeting hype. Think long-term, stay disciplined, and focus on the fundamentals. What are your thoughts? Do you think we're in a bubble, or is this just the beginning of a new era of growth? Let me know in the comments below. I read every single one. And if you found this analysis helpful and want more deep dives into the financial markets, please do me a huge favor and hit that subscribe button and turn on notifications. It really helps the channel grow. Thanks for watching the Babalian Money Show, and I'll see you in the next video.